Institutional adoption of crypto just continues to heat up in a very large way, and I do believe that Hedera should 100% be focused on when it comes to institutions, enterprises, and the future of finance in general. Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So if we take a look at some of the institutional names that are in the space, or even, announce that they're doing something around crypto in just the last couple months, it's kind of crazy. Because if we go back just a couple years ago, there was a lot of naysayers that were saying like, oh no, like these names are not going to touch crypto until regulations or this, that, whatever. But one of the biggest things that I've always said on this channel is these big institutions, these big TradFi players, they're already here. They're already here, they're already building, they're already in discussions and plans with these actors. All they are waiting for is specific guidelines to be put in place. Hedera continues to be a big focus from my point of view. Why? Because of the institutional names tied to it, major banks, manufacturers, enterprises, you name it. Hedera is an absolute giant. If you look beyond the retail noise and all the nonsense, Hedera is becoming one of the biggest projects this space has to offer. So let's actually talk about this. So it's official, the institutional adoption of Web3 is here. Now this goes back a little bit of time, but we've seen FedNow, major banks, global car manufacturers, and beyond all join the HBAR ecosystem. So let's dive into the past 3 weeks on Hedera. For an example, we have yesterday DropCC, the micropayment solution built on Hedera, was showcased as a service provider for FedNow, the instant payment service developed by the Federal Reserve. And yes, it's actually a pretty big, deal. DropCC is a player that is tied back to FedNow. We also have, SushiSwap Labs announced their updated HBAR USDC by Circle Pool. SushiSwap has been absolutely killing it. Also, Galaxy, don't forget Galaxy on Hedera. Big player around the creator economy. It is a social media application that actually is powered by Hedera. They're looking to expand rapidly. It is a social wallet as well. Very big deal. And then also banking, right? We have SB Group. We have MTech. MTech, I continue to focus on to this day because they are a big player, but also TradFi itself around tokenization. You have Archix with Aberdeen. Also, very big player. Been talking about it for a while. Then you also have TradFi and Supply Chain, Fresh Supply Co., the largest user of MasterCard, Providence, MP, before its sunset, connected Hedera to MasterCard through the Continuity API. And also Kia, all of these big players. Like, guys, it's crazy to see the names that are tied to the space now. And it is, a lot of it has to do with Hedera as well. I mean, look at the GC around Hedera. Just to mention, one thing, the GC around Hedera is very substantial because when the retail sector returns to this space, they're going to look at this GC. They're going to handpick out the companies and the names that they know. And they're going to say, I see a big future around this project because of these names. But also, as we look at these names, they are aware of DLT. They are aware of Web3. They are aware of the technology that powers these networks and what it can do for their business model. Also, gaming, sports. I mean, the future of basically everything is going to be built around and on DLT and digital rails. And also, check this video out over here, the behind the scenes conversations they don't want you to hear. Institutional adoption of crypto is happening faster than anticipated. These are the high-level conversations that shape my worldview on crypto. Listen closely. These institutions are using DLT now. Big shout to Smoke Dog for this.
I'm assuming that the audience wants to know what are the key so whats. And the key so what is that global institutional adoption is tracking much faster than you would think. If you read the press, you would think blockchain and crypto is people that have created things like Bitcoin and Ethereum, and they're building DeFi and NFT platforms and other things. And you would believe, if you read the press, that the big asset managers don't need it and aren't involved. They are. Of the top 50, 52% of them, that's more than half, have a digital wallet or some digital custody or digital trading offering already in place. That includes every Chinese large bank, because they needed their digital wallet support to support ECNY, which the digital yuan, and so on. 42% of them can already offer you and handle digital monies, which includes CBDCs like the CNY that I just mentioned, but it also includes stablecoins, for example, a Tether or a Circle. And about a third of them are also beginning to get involved in digital assets or digital commodities, which includes the Bitcoin ETF. So the BlackRocks and the Fidelities of the world have already launched their Bitcoin spot ETFs. But there's a whole world of other people, including people with names like Goldman Sachs and Citibank and JP Morgan, who may be saying they're very anti the space, but in practice, they're very actively involved underneath the surface of the BlackRock IBITs or ETF. So again, they may be saying, I'm JP Morgan and we don't really need any of this. But the truth is JP Morgan or Goldman Sachs or Citibank is actually building a business right now that's built on top of distributed ledger technology or Bitcoin and blockchain and other things. If you have a moment, you can download it for free on the homepage of our website. And certainly if you're out there talking to your friends and your friends are saying, this isn't real, there's no use cases, the world of finance and commerce doesn't need blockchain, this is evidence. This is fact-based evidence that argues the opposite side.
And there you have it. There's going to be a lot of naysayers. There's going to be a lot of those that are saying like, oh, there's no way that crypto blockchain it's never going to happen. It's never going to be adopted. The skepticism around this space is so ridiculous. But then when you look at these names like BlackRock, Fidelity, Franklin Templeton, the biggest banks out there, JP Morgan, for example, Bank of America, all of them have been around this space for, almost like a decade now. What do you think they have been doing? But also over here, the era of institutional adoption is upon us. Digital assets are the first genuinely new asset class in the last 150 years. We expect 2024 to shift up gears in the institutional adoption of digital assets, and here's why. Besides the above, we identified other key indicators reinforcing the odds of an institutional avalanche being imminent. And this is because of, JP Morgan, BlackRock, Barclays, Euroclear with World Bank, the Eurobond, UBS launching their ETF trading in Hong Kong. Like all of these ETF tradings, like all these ETFs themselves, a lot of what we are seeing from JP Morgan, a lot of the tokenization endeavors, like all of this is heating up. It's allowing other institutions to look at this and say, maybe we should be taking this a little bit more seriously. And now they're just, flooding in. That's why we look at that institutional avalanche. And this is saying that's being imminent. Now also over here, banks are here ready to have an impact. The beginning of a great collaboration, the convergence of crypto and traditional finance is underway. And yeah, it's happening. It's happening now. And it's crazy that people don't see what's really going on. A lot of them are just blinded by the shortcomings of price action. That's it. Now, also, we got a big announcement. Digital Pound Foundation member Accenture has announced a new investment in MTech, a global fintech that provides SaaS platforms to assist central banks in streamlining and modernizing their operations. And remember that MTech is built on Hedera. Over here, Accenture invests in fintech firm MTech to support central bank modernization. Accenture, a member of the Digital Pound Foundation, has announced its investment in MTech, a global financial technology company that provides software as a service platforms to assist central banks in streamlining and modernizing their operations. The investment made through Accenture Ventures aims to bolster MTech's mission of transforming central banks' financial and technological infrastructures, enabling them to better regulate fintechs in an increasingly digital economy. And yes, MTech providing that technological infrastructure and getting this investment from Accenture also proves that Hedera is making its big foray and is becoming a big name around the infrastructure of banks, central banks, and even the financial system itself. And I've said this since going all the way back to like May of 2021 when we first heard about MTech. Now we have both Accenture and MTech work closely with financial institutions to address key challenges such as regulatory compliance, payment acceleration, and promoting financial inclusion. Accenture will now incorporate MTech's offerings in digital cash, regulatory sandboxes, and compliance into its core banking transformation services, enhancing its capabilities and helping central banks navigate these issues. This is absolutely massive. We're going to talk about why here in 1 second. Now, with continuous innovation and disruption across financial services, it is crucial for central banks to adapt their operations to remain at the forefront of the industry. This is from Accenture. Our investment in MTech will help us provide central banks with the infrastructure needed to tokenize and for also CBDCs, while also improving their payment systems and regulatory capabilities. This collaboration reflects a shared vision of modernizing banking infrastructure for the tokenization era. Accenture's involvement will allow us to support central banks more effectively, backed by cutting-edge technology and global expertise. Guys, this is massive, absolutely massive for Hedera. We are proud to invest in MTech and help underrepresented founders access the capital, connections, and mentorship they need. This investment reflects our belief in the importance of diverse leadership in driving technological innovation. Now, this is a huge step for the entire industry. It is a huge step for Hedera. Guys, I could not be any more bullish around this. Even over here, there's another private meeting. This is with the GBBC. Big shout out to Subjective Views for this. The Global Blockchain Business Council, GBBC, will be hosting a session called Not All Blockchains Are the Same, powered by Accenture, Algorand Foundation, and Digital Asset on September 18th. In this session, they will be covering Hedera and focusing on its unique aspects, such as Hedera's decentralization efforts. This session is not available to the public, as it is only meant for regulators, government agencies, central banks, and international standard organizations. This is going to be one to focus on if we get any sort of breadcrumbs from this. Guys, the GBBC is massive, 500 institutional members tied to it. They are working with some substantial names out there. I've talked about all of the alliances that they also have. They are behind a lot of what we are seeing around adoption of this type of technology, innovation happening around this technology. But Accenture, guys, let's go back to this, because Accenture with MTech are now focused on helping central banks navigate a lot of the issues around offering some of these core banking services within tokenization, digital cash, all that kind of stuff. And Accenture is now plugging in MTech into its core system to offer this to their clients. Guys, this is massive because of Accenture's size. I've talked about this, right? They've been behind a lot of the big changes happening technologically. We have sustainability, inclusion, and diversity, responsible AI, transparent workforce reporting, apprenticeship as well. But down here, okay, we get a glimpse at the size of Accenture. 750,000 employees worldwide, 9,000 plus clients served across more than 120 countries, 350 plus partners in their ecosystem. But guys, 9,000 plus clients. So like, this is one of the largest companies out there. And this is why I focus on the connections. I focus on the bridges being created here. This investment with MTech proves how substantial MTech is. It proves that Hedera is becoming a key accelerator around digital finance to central banks. I am very, very bullish about this. I think that this is very exciting for Hedera. If you hold HBAR, you need to be focused on this. But this proves that institutionalization of this space is underway. Key players, the key winners, are being handpicked here. So with that being said, I hope you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.